Markets under a bit of pressure today, but we are going to get a whole bunch of earnings reports this week, including Tesla is due to share its numbers on Wednesday. Robert Schein is back with us. He says that with many tech stocks trading at big discounts right now, he sees it as an entry opportunity, including for Tesla. Well, let's start off with Tesla if we could. You reckon Tesla is cheap, Robert?
You know, Tesla's a story that is, today versus tomorrow. Today is what matters, meaning later this week on their earnings call. Tomorrow, Elon Musk, sold the future of what it could be. Last week, it was kind of disappointing, if you will. Stock, backed up a little bit. But if you look at Tesla over the last 1 year and 3 years relative to the S&P, you got about a 50% discount, meaning that you've, could have been better off by 50% by being the S&P 500. That being said, if Tesla returns to the profit margins and returns to the EV sort of demand market, giving us an update on that, relative to everything else, Tesla's at a discount right now, and it looks very attractive.
You have another idea for us, Amazon, the company we love to hate. I guess it's just so convenient, but it does hollow out other retailers. What has Amazon got going for it right now?
Like Tesla, Amazon is also a big discount over the 1 and the 3 year relative to the S&P 500. In fact, you have the opportunity to have probably one of the best stories for 2025, we believe, is Amazon. The reason why is AWS is really re-accelerating. The profit margins internally of Amazon, it continues to get more and more efficiency. So the efficiencies there, and all different business units are now firing on all cylinders. So Amazon looks attractive relative to those two, relative to, your Magnificent Seven are the laggers, and we believe that they have room to run.
That's interesting. By your numbers, it just hasn't got the shine that the other Mag 7 stocks have right now.
Well, it hadn't, but now moving forward, we believe that the valuations and the price look attractive. So yeah, relative to, and then looking forward, quite frankly, they just haven't participated. And so, both companies have, worked on cost cutting, and that's going to help the profit margins and the profitability that we've seen from the other companies. But there's a lot of value in the marketplace overall relative to the Magnificent Seven. So yeah, we're encouraged by the equity market.
And you have a final idea for us, not tech, but Home Depot. Now, we touched on the U.S. consumer earlier, of course, a great engine of consumption, but Home Depot stock is up. Oh, I didn't know it was up that much, 41% in the past year.
Yeah, it's on a good run, backed off a little bit from all-time highs. Home Depot is going to continue to run. Again, this is another story. The 3-year number on Home Depot is still negative to the S&P 500, relatively speaking, meaning that there's room to run. And the reason why is, as I said before, $44 trillion of untapped consumer wealth. As interest rates are pulled down, consumers can go, look at that for some excess capital. And then 70% of all the homes in the United States today are over 25 years old. So the replacement, rebuild, refurbish cycle, that's a $1 trillion home improvement market that Home Depot is number one in the category. And they're going to continue as consumers continue just to settle in and nest and take care of their homes, as there's a lot of deferred maintenance out there. So it's a great, solid business model. They're going to continue to execute.
What about the restaurant stocks or the fast food stocks? I'm thinking about McDonald's, MCD, or restaurant brands, QSR. We know that consumers have been horrified by the rise in food prices, including the price of fast food.
Yeah, like anything else, I think that you're going to have clear winners and clear losers. And what's going to separate that are those companies that have the ability to integrate AI quicker and faster. So those efficiencies across the business model. And then you're also seeing a lot of these companies do, bring in the consumer and get the consumer loyalty through apps. Mm-hmm. So they'll throw out the coupon of the day, and they'll be able to drive demand that way. So if they use technology in the right way, even though there's rising wage price pressures, mm-hmm. rising inputs from food, there's still the efficiencies of scale and abilities for these companies to do that. So those companies that can execute on that will win out in the long run.
You mentioned apps. Starbucks has long been a leader. They get people to order outside the store and they go pick up their drink. It all adds up to more strain on the baristas, apparently. What about Starbucks? Would that be a stock you're interested in?
It's funny about Starbucks. I was just in a airport the other day and everyone was waiting for their mobile app delivery on Starbucks, but nobody was actually in the physical line. And I said, excuse me, is anybody waiting? Nobody was. So I went up and I ordered and everyone looked at me and I got my coffee before everybody else. So I think we're a little bit over too much on one side because I got the best service by doing it the old fashioned way. So there's a balance that has to happen. I think customer service is still key in this world that we live in today. But I was just shocked that I was able to go right past everybody and everyone's mobile order was taking at least 15, 20 minutes from what I gather. But yeah, the technology is out there, but companies have to figure out the best way to use it to, again, incentivize customers and drive demand. But I think those best breed companies like a Starbucks, like a McDonald's, even Domino's Pizza will figure that out. And they're going to continue to do well for many, many years. It's
going to be interesting, isn't it? If companies want us to deal with their AI chatbots, I guess the legalities will have to be worked out. If the chatbot tells us something, can we rely, the company gave me this undertaking, this commitment?
Yeah, I think we're going to eventually get to old school is new school. So customer service is what we do at our firm is we pick up the phone. Even though AI is great and there's going to be, room for it, you have to basically parse out where the best part of your business model you can actually integrate that, where it's going to be efficiencies. Yeah, I don't trust the chatbots. I don't know about you, but I like picking up the phone and I like talking to people.